and a moderator, Farouk. And I'd like to, before we start, I'd like to quickly run you through our housekeeping rules. So today's session is scheduled for 1 hour, and it will include the question and answers. All participants are requested to keep their videos off for this session and stay muted. The question and answers will be held at the end of the session, so you can keep submitting your questions via the chat box, but the moderator will take your questions at the end. This session will be recorded and we will post it on our website and social media. And I request you all to please do give us your feedback at the end of the session. I would now request Farouk, who is very well known to the local industry, and Farouk, over to you, please. Thank you.
Thank you, Sarwat. Thank you. Hello, everyone. Welcome to the webinar. Today, the idea behind doing this webinar is we've got our panelists Farhan, Ali, and Shamoon, and all of them have extensive experience on the buy side and the sell side, working with or as foreign investors in the Pakistan equity market. We've seen a very big move in the equity market recently. As we know, historically, foreign investors have had a big role in both bull and bear markets in Pakistan. So I think the idea behind this webinar is to understand the perspective that foreign investors have in Pakistan, how they're viewing the macroeconomy, the micro opportunities right now, get a view from our panelists on that, so that we can provide context to what we can expect at the PSX going forward, particularly from a foreign investor's perspective. Just by way of introduction, I am the co-founder and CEO of True North Advisors, a boutique investment advisory firm in Pakistan. We operate in both public and private markets. I'll request each of the panelists to just give a brief introduction as well. Farhan, if you can start.
Sure. Can you hear me?
Yes.
Okay, sure. So thank you, Farouk, Sarwat, and CFA Association for inviting me here, all the participants for dialing in and joining. So my name is Farhan Rizvi. I head Asia Frontier Research for Credit Suisse. I've been with the firm for about 10 years based in Singapore. My background is, I started off as an auditor with Deloitte & Touche in Singapore. I've also worked in Pakistan with JS Global Capital. And my coverage areas have been within the frontier markets, Pakistan, Vietnam in particular. And I kind of cover more strategy, financials, property, and consumer sectors in terms of my direct coverage. So I've been dealing with the foreign investors for more than a decade, investing into Pakistan. Yeah.
Great, thanks. Ali, maybe you can introduce yourself.
Absolutely. Thank you for inviting me, and it's a pleasure to be talking here. My name is Ali Farid Khwaja. I'm the chairman of KASB Securities, which is a stock brokerage in Pakistan. We have a big focus on fintech. We have an app, K-Trade, which is now used by over 100,000 people. For the last 15, I live in London. For the last 15 years, I've worked in tech banking, both on the buy side as well as on the sell side at UBS, Berenberg, Autonomous. And I was CFO of a billion market cap company listed on the London Stock Exchange, which was doing global payments. So my experience has been mainly talking with tech fund managers, investing in companies ranging from Apple in the US to Samsung in Korea. And now, with KSB, a lot of our focus is dealing with these investors.
Great, thanks for that. Shamoon?
He's on mute.
Shamoon, you're on mute. We can't hear you.
Yeah, I wasn't able to unmute myself actually. Yes, sir.
No worries.
Yeah, thank you. Thank you, Farouk, for inviting me. This is Shamoon. I am the fund manager and Deputy Chief Investment Officer for Trinidad Founder. We invest, actively follow 15 to 20 global frontier and emerging markets, and we have an active exposure in more than 11 countries at this point in time. We are based out of Stockholm, Sweden, but we have office in Karachi and also one in Ho Chi Minh City, Vietnam. So yeah.
Great. Thank you. Thank you. Thank you, all of you. So let's start with something quite topical. It's been in the news recently, the Roshan-Pakistan digital initiative that's come through from the State Bank. Ali, given your sort of background in technology, and also you've had an association with this particular initiative as well, could you shed some light for our webinar today as to how this is maybe different from the SCRA model, and what were the issues with the SCRA model, and do you see this as something which will provide liquidity, meaningful liquidity to the market in the years ahead?
Thank you, Farooq. That's a great question, and it's a very topical one. State Bank called a Russian digital account a new era in banking. So I certainly agree that it's a major milestone because now it's easier for overseas Pakistanis to invest in Pakistan. They can open these accounts and then invest in stocks. They will be able to invest in bonds, and the roadmap is that they'll also be able to use these accounts to invest in real estate. So the reason why it's so meaningful is because previously, you mentioned SCRA account. Previously, when clients wanted to invest in Pakistan, it took them more than 6 months to get an account opened for that special convertible rupee account opened. Now, under the new rules, theoretically, they can open an account digitally within 48 hours. So that's a big milestone. Previously, Pakistanis, let's say, living in Berlin, Munich, they had to go to Berlin to get all their documents attested, notarized, and certified by Pakistan Embassy. Now they don't need to do that. So there are 15 million Pakistanis living abroad. They send $25 billion back. And strangely, prior to that, they couldn't invest. So while they could send money back, which they were sending, they couldn't invest. So with now they can. So we are planning roadshows in London, in Middle East, in the US, because we think that out of that 25 billion, a fraction can go directly into investments, and that for the capital markets can be fairly meaningful number.
Sure. Okay. And I mean, in terms of the SCRA accounts, the feedback I get from people, including yourself, has been that the banks were not incentivized to really facilitate the customers on the SCRA front. So how do you think that will work with this Roshan Digital Initiative? And I mean, we know that 7 banks have been shortlisted for that, but do you think that will be any different given the push of the State Bank?
So there were a lot of problems with this SCRA account. The first problem, as you said, that banks were not pushing it. So, I had clients, I used to refer them to banks, and the banks would say, we don't even know about this product, and there's no desk for dealing with SCRA. But fundamentally, the bigger problem was paperwork. So there was no digital onboarding. And you mentioned fintech earlier. For fintech and for growth in banking, digital onboarding is critical. So with these accounts, it's not purely digital, but at least 90% of the process is digital. So that's a big thing. The second thing, which the second big problem with SCRA, as I mentioned earlier, was that it required a lot of attestation. Which was expensive and very costly. So all your documents needed to be notarized by a public notary, then certified by UK High Commission, UK Foreign Office, and then apostilled by a Pakistani High Commission, which of course was not in every city. So with these accounts, you don't need that. So I think the big bottleneck which was there is solved technically. But to your point, it's a very valid point that without marketing, it won't fly. And then it's not that people will suddenly wake up one day and say, hey, I want to open a Roshan digital account. So it requires a lot of marketing by the ecosystem players involved. So, there are 5 brokers which are integrated with through CDC with these 7 banks. KSB is one of them. So that's why we are planning roadshows in different cities to promote it. But it requires that. It requires active promotion.
Okay, great. Thank you for that, Ali. So let's now shift gears and move into, understanding the perspective of foreign funds with regards to the Pakistani economy. So let's divide this into two bits. So we'll start with the macro bit and then move on to the micro bit. So in the macro bit, the thought that, we have had looking at Pakistan and, interacting with foreign funds has been that this has been a very cyclical economy. It's been boom, it's been bust, at least for the last 20 years while we've been seeing it. And I think the idea now is that the thought is that given the interest rates declining, the current account moving into surplus, that maybe we are entering into another boom phase right now, and the market's kind of also appreciated, which is reflective of that. Farhan, just to get your thoughts on this, how do you see this, and how do you see this particularly in the context of our debt ratios, our debt to GDP levels? Because historically we've not been that high, but now we are. So is it something which, how do you kind of view it as a macroeconomist looking into Pakistan, and how do the foreign funds view it, who you speak with?
Sure, Farooq. I think it's probably the most valid question whenever foreign funds look at Pakistan, and the macro has always been volatile. I think, as you mentioned, we've had cycles in the past, and Pakistan has been a cyclical economy. The last cycle, which we had about 14 to 17, there was a lot of hope with CPEC that we might see some structural adjustments, but that kind of did not go through. So, and what has happened with debt levels is now, since debt levels, so in the past we used to see debt levels at 60% of GDP, which was fairly contained. Now with debt levels close to 100%, obviously the tenure of these cycles tend to be shorter. And the feedback that I've kind of got with fund managers is that timing is very important in terms of these cycles, which will get shortened. And the biggest challenge for people is that normally, if you're a long only investor, you want to come with a 3 to 5 year horizon if you want to do that. And that's becoming pretty challenging, particularly with regards to stability, because political stability has also been a challenge in Pakistan. And in markets, in other frontier markets, what we've seen is that wherever there is some degree of greater stability, say Vietnam, apart from obviously the other aspects, people tend to favor that. So that's a challenge, because sustainability, particularly on the external side, has its issues. Stability is a challenge, and obviously now the debt levels are getting to a level where there are more challenges as well. So that's sort of the broader assessment that I see. Yeah.
Sure. And in terms of, if you look at the last cycle as well, the bull run we had from 2014 to 2017, generally, I think the foreign investors were net sellers, other than, of course, that bit at the end because of the MSCI upgrade. So it seems like they didn't buy into the macro story even then. And of course, the fundamentals were probably better, especially in terms of the debt levels. So I think what I'll do is I'll get Shamoon's thoughts on this as well, and I'll get Farhan's as well. Both of you look at Vietnam in different capacities. Shamoon, you guys invest there. It's one of your key markets. And I think it might be just useful for our audience to contrast Vietnam with Pakistan from a macro perspective, and understand, how those contrasting macros are maybe leading to different perspectives for portfolio managers.
Well, I guess there are two parts of it. First of all, one is something that we have kind of created an analogy for it, which is a perception arbitrage. Obviously, one area where Pakistan has lacked historically is creating an image in the global investors' mindset, where they think the country is safe, and we have had our share of insecurity, law and order situations, the political crisis, and so forth. Uh, so that was one, but obviously that has reflected in the valuations of Pakistani stocks when we compare it to the region. So obviously that's one part of it, and that's something that we have tried over the last 8 to 10 years in convincing the foreign investors and bringing them to Pakistan and making them to see for themselves. So that's just one part of it. The second part is that also Farhan mentioned, I guess Pakistan um, has a lot of challenges in terms of their domestic politics and domestic economy. You mentioned Vietnam. I guess when I started investing in Vietnam for the first time in 2013, and at that time, and when I visited Vietnam for the first time, I used to proudly say that Pakistan is here, Vietnam is here. But today, unfortunately, I have it has flipped sides. Vietnam is here, Pakistan is nowhere actually. Um, Vietnam has been able to grow 7%, 6.5% consistent GDP growth, while Pakistan has had their boom and bust cycle. So I don't think we should call it a bull run or anything. It's just like the valuation gap. So it's just a mean reversion. So I guess for Pakistan for the last 10 years, it's just been fluctuating between their means. So there hasn't been any sustainable macroeconomic development, and as far as on the political side. Um, we every 4 years we run into a current account crisis, and then we have to run to IMF and so forth. I guess it would be very difficult for foreign investors to answer that unless this government comes up with the permanent fix towards this. While other countries, we don't hear that kind of headlines every 3 to 4 years. So unless Pakistan gets out of that boom and bust cycle and have a sustainable long-term macroeconomic policies and so forth, I guess we will see these um, kind of foreign investors coming into Pakistan, and as soon as they get decent profits, and then they will go out of it. If you want any on Vietnam, much detail, I can come back on that, but I guess that's my quick reply to that.
I guess just the only thing to kind of push through on this is that I think one of the, just to understand maybe from our perspective that how big a factor is macros or stable macros to even getting foreign investors to come and kick the tires in a market like Pakistan or even Vietnam for that matter. Because it seems to some degree that a lot of them have just given up, given our boom and bust macros. So maybe contrasting that with Vietnam and understanding
Well, I guess
what is the
absolutely
importance of that. Maybe we have great company, Pakistan.
Well, I think it's a major determining factor. So first, for us, like obviously we are on the buy side, and when we pitched our clients to come to Pakistan, first of all, they never were willing to come to Pakistan because of law and order situation. But thankfully, that has been resolved. But even when they come to Pakistan, there are two areas that actually concerns them, and they go back without investing in Pakistan. One is obviously the unsustainable macroeconomic policies in general, and second is better opportunities and avenues in other countries. So I think that is a very important determining factor, and especially for the long only and having an investment horizon of 5 to 10 years. I think they normally shy away from Pakistan. But anyone with the 2 years of investment horizon, especially the US based hedge funds, I guess they will still be interested in Pakistan.
Okay, and how do you guys at Tundra kind of decide whether to decrease and increase in allocation to a specific country? Like what would be the top two things? Maybe.
Well, I guess we are a bit different from conventional fund managers, and the reason being we are stock nerds. So it doesn't matter. It's about the country or it's about the team. We basically try to pick structural growth stories wherever we find it. So whether it's Vietnam, whether it's Pakistan, so that has been one of the reasons. For example, even if so one of our largest holding in Pakistan for the last 4 or 5 years has been the tech company in Pakistan, that is Systems Limited. So we entered into that. So that we at that point in time we thought that's a structural growth story. So even if we had to exit Pakistan, we wouldn't have exit from that tech company or those structural growth stories. So for us, Pakistan still is a decent market. I think we are able to find good growth stories in Pakistan even today.
Great, Shamoon. Thanks for the input. Farhan, if you want to chime in a little bit, you cover Vietnam as well with Credit Suisse. So anything you want to add in terms of the macro contrast
Sure. I think as Shimon was kind of mentioning about the stability and the sustainability. I mean, it's not that Vietnam did not have had boom and bust cycles. We saw a couple of them in 2008. We saw that again in 2010, 2011. But what has followed after that has been an adjustment. They used to run very high fiscal deficits. They have managed to bring those down. They've been able to, because of stability, because of consistency of policies, they've been able to bring foreign investment in. And I think those factors have now ensured that their currency is more stable. They have a structural story intact. And now with the sort of China-US trade war, it's become a more thematic story. I think one of the things that I have, anecdote I want to share is that, this perception arbitrage is something that's a very important point. Interestingly, in terms of my experience, while it had been challenging to bring foreign investors into Pakistan, I mean, a lot of them did come in between 2014 to 17. And the interesting thing was, and a few of them came multiple times as well, the first impression of Pakistan was obviously positive, much better because your sort of expectation level is very low. But one of the things that I observe, and this is sort of my sort of anecdote, is that when they visited subsequently, say a year later or 2 years later, compared to their sort of experiences with Vietnam, things did not change much. There was not sort of something that they could relate to and say that, so the expectation was still the same, and what you ended up getting was maybe slightly more negative, say in terms of infrastructure or in terms of other aspects. So I think that was also something that was important. I think one other differentiating factor I would say is that with the case of Vietnam, I think they because of their proximity in terms of the ASEAN region, they had a lot of sort of arbitrage in terms of people like Thailand who were struggling with growth, or even the likes of Singapore. They were very amenable to those guys who were sort of sitting on rich coffers, and they could really bring in money. And that's something that we've kind of seen, even say for the Koreans. That is unfortunately something Pakistan, being in a much volatile region, has been able to face in terms of structurally on a macro level.
Okay, thanks. I mean, I think it's a useful point to note that the perception is, I mean, what you want to see progress, particularly when you come into a developing country. So if in multiple visits, you're going to see degradation. Ali, I know you want to say something. I just want to throw something your way as well, because KSB came up with a very detailed, comprehensive investment outlook a few weeks ago, if I'm not mistaken. And the thought around that was that, you were saying that, we're already well into a bull market, and you expected the positive momentum to continue. The reasons, of course, were different, and you kind of highlighted that domestic liquidity will probably drive the thought. But whatever you want to add to this discussion, but also maybe just to take on that point, that how do you see the economic cycle? Because we see that with the higher debt levels, the deteriorating fundamentals, the boom, I mean, the first time we saw it 2003 to 8 was 5 years, 2014 to 17 was 3 years. So how do you kind of contextualize the improvement in macros in context of those, rising debt levels?
No, thank you. That's a very loaded question. And linking it up with what Shamoon and Farhan discussed earlier, so I think they have mentioned it, that the cyclical pattern in Pakistan is well recognized. The cyclical pattern on the macro side, on the market side, is well recognized. But I think we have to take a step back. And also, when we ask a question, or at least when, from my perspective, when I ask a question, perspective of global fund managers, global investors, it's not just talking about public market investors. We have to look at the various pots of capital which are available. So, overseas Pakistanis being one part of them, and we discussed that earlier, that this pot, the overseas Pakistanis, send $25 billion to Pakistan. It dwarfs everything in perspective. It dwarfs FDI, it dwarfs IMFs, it also dwarfs, of course, the public market investment. Another pot of capital globally available is the large companies. So, Apple has a market cap of $2 trillion. And if you look over the last 10 years, it has been the cash balances of these companies which have consistently grown higher. And the difference between them and a public market investor is that a public market investor, i.e. a Templeton, a Lazard, they are prone to two things. They are prone to they have to benchmark themselves and their performance is viewed on a monthly basis. So if a country, so they have to follow the momentum, although they might say we are long term, but they really are not, because their LPs are looking at their performance on a monthly, if not even a shorter duration. And secondly, they are prone to their own vagaries of their inflows and outflows. So I might love, if I'm a fund manager, I might love Pakistan, but if my fund is seeing outflows, I will have to sell my position. And we saw that. And I think the cyclicality we see in terms of foreign investors' inflow and outflow, a lot of that is driven by their own nuisances. So if you look right now, frontier market funds are seeing consistent redemptions. And I think that's one of the reasons why foreign fund managers are a net seller in Pakistan. So at KSB, and when I look at the business, I look at two segments, which does not really include the public market fund managers. It includes the retail Pakistanis, retail investors, both living in Pakistan as well as those living outside of Pakistan. So the 15 million overseas diaspora. And the second is the non-public investors, so large companies. And in that, I think Pakistan is a very attractive story on the tech side. Last year, I bought the president of Tencent Music to Pakistan. It's a 30 billion market cap company. He himself was worth $2 billion, so larger than many funds. And he never asked me about macro. He never asked me about FX, because for these companies, they are chasing two things. They are chasing growth, and they are chasing the growth can only come from expansion into countries with high population. So these were the factors which they are looking. They are less sensitive to macro. But I totally agree with Farhan. These guys, they do look at things like, are things moving? Is there progress? Because the fundamental thing for these guys is growth. So you have to show that. So that was my 2 points. That so coming to the point about the report we published, we think that this time it's slightly different, because this time I think tech can enable new investors to come in the market. I mentioned that on K-Trade, there are 100,000 people who are signed up. Every day, 1,000 more people sign up. So Pakistan does not allow digital onboarding domestically. Whenever that is enabled, I think there can be massive growth in new capital which can come to the market. And as we discussed earlier, for overseas Pakistanis, Roshan Digital Account is a big initiative. And the third thing is that a lot of these tech companies, whether it's Amazon or Google or Facebook, it's inevitable that they will have to enter Pakistan because the pressure is on them. So on the payment side, we have seen checkout.com, which is opening up. Ant did an acquisition earlier. Visa and MasterCard are getting active. I think you will see more and more traction on that side.
Great. That's I think that's very useful to all of us, for all of us to know that, and you providing a very good segue into where we wanted to take this discussion as well, because one of our issues in Pakistan has been that, moving on from now the macro to the micro, the bottom up part of investing here. I think one of the big issues that at least the public markets have faced is that we have a large weightage, especially in the liquid space, of so-called old economy sectors, whether that is the E&P sector, whether that is the fertilizer sector, whether that is power utilities, and significantly underweight on sectors which are, which are the real sort of, why do people look at Pakistan? They look for the growth, they look for the low per capita, which may go up, the demographics, the consumption story, the technology part, as you mentioned, the automation, the digital gap and the digital opportunity. So we find, of course, very limited opportunities to kind of play that in our markets in terms of whether it's the technology sector or whether it's the pharmaceutical sector or even FMCG for that matter. So how do, maybe Ali, you can start with this and just continue a little bit based on the, the technology theme you picked up. How do you view it? How does someone kind of solve that challenge, and how does local investor maybe also start broadening their horizons a little bit in that regard?
It's a great question and very valid point that globally, this is not just specific to Pakistan. Globally, we have seen a shrink in older industries such as energy and a massive rise in new tech. I think technology is now the biggest sector. If you look at the US, out of the top 10 companies, 8 are technology companies, which did not even exist 20 years ago, right? So that shift has happened, and it hasn't happened in Pakistan yet on the public market side. But I think I'm very optimistic because certain reforms which SECP and PSX have done. For example, the setting up of the growth enterprise market. They have waived the requirement of profitability. They have waived the requirement of a long track record. And I think there will be a lot more IPOs coming in Pakistan of these companies. Another thing is that some of these companies can also choose to list themselves outside of Pakistan. So, for example, we are recommending companies to list in London. They can consider listing on the Nasdaq. So the powerful thing about technology is that it's global. So I think it's only a matter of time. And I do feel that over the last 12 months, there has been significant change in SECP and PSX. So I think if you look at Pakistan regulatory regime, and I don't want to talk too much about it, but between 2008 and 2019, it was quite restrictive. But I think in the last 12 months, there have been a lot of change, such as this Roshan Pakistan account. And I think there'll be a lot more, so we will see more IPOs coming.
Well, that's heartening to hear. I mean, we hope so too, because and we want the right kind of IPOs as well. Like in the right sectors, because that's not always been the case. Shamoon, just to take it up from here, maybe we see in the Tundra Fund Manager reports, I think one of maybe your second largest holding in Pakistan is something in the technology sector, which is systems, and you've held this position for quite a while. I just wanted to wrap the question to you about, your thought process around systems, what it's been over the years when you guys initiated the position. How do you see it going forward? Just as an example, not to specifically speak about systems, but just as a, the experience I've had, and I think all of us have had to some degree, is that the way that the domestic fund manager, the perspective of the domestic fund manager and the foreign fund manager is fairly different. Now, why is it different? The domestic fund manager, I have felt, is very fixated on valuations, whether that's PE, dividend yield, price to book. So, in a certain range, the valuation seems cheap. In a certain range, the valuation seems expensive. The experience on the foreign side for me has been that the valuation question, albeit very important, is not of paramount importance. They look at the growth prospects, the business model, the capital allocation decision, corporate governance, all of those sort of more qualitative aspects as well. And they're willing to pay up then for quality. And they've seen those trades or those compounders work in international markets. So they're willing to pay, premiums here in Pakistan for the high quality companies. So just that specific question, maybe with regards to, your investment, successful investment, I would say, into systems. How had you guys seen it? Because I think the more, people have now gotten quite interested in that name, but not maybe a year ago, or 2 years ago.
Well, actually, while living in Sweden, it's hard to be not in love with tech. I think I live in a society which is actually everything is tech. So I've seen that cycle of how technology gradually tries to creep up everything and every manual work that exists today. Obviously, Pakistan in that terms lags way behind. But like rather commending on system, because that is still our holding. So I wouldn't want to bitch or say anything against it. So, but like in general, if we speak about technology, obviously you mentioned about the valuation. So the way we see it, obviously, as I mentioned earlier, we look for the structural growth story. So anything which can sustainably grow for 20+% for the next 5 years, 10 years, I think paying a premium or paying a higher valuation of even 30 price to earning, that wouldn't hurt that much. So I think it boils down to what are you looking at. If you're just looking at the punt in the market, then yeah, there are other sectors. But if you're looking for the real investments, I guess technology there's no question about it. And that's very unfortunate in Pakistan that there's only handful of technology companies listed in the market, so no one um, can actually invest in that boom that we are about to see in Pakistan. And yeah, even if there are some the corporate governance or the sectors they're playing in, I guess um, they're not of that quality. And when we speak about how to attract foreign investment, I don't see like obviously uh, when we look at the composition of the Pakistan Stock Exchange, what to invest in. So the foreign investor doesn't want to invest in the energy or banking sector. They can find the same or cheaper banks in Africa maybe, or in other Southeast Asian countries. So I think the love for tech is there, and I think if Pakistan, um, I'm sure if Ali is saying that any IT company is up for listing, I think that can open doors for the new foreign investors.
Great. And just in terms of, where, I mean, where you think, for example, the kind of success stories you've seen in maybe regional markets, because this is what I honestly feel has been the edge of the foreign fund managers, because they've seen something play out in Indonesia or India, and they are then kind of, seeing that potentially play out in Pakistan. So they have that edge or that perspective edge compared to the domestic fund managers. So uh, in terms of you know uh, these sort of compounding stories or structural growth stories, do you think that foreign funds, as and when they come in, and just, you guys are a foreign fund as well, that would be the primary area of focus rather than uh, just being in the the liquid but maybe names which don't have kind of a growth pattern around them?
Well, for us, I think that would hardly be the case. So we would rather go somewhere else to buy something quality rather than going or basically lowering our quality. In terms of that, liquidity is something that is manageable, but it needs to deliver growth on that aspect. As you mentioned, having exposure to the global markets, I don't think that necessarily increase. I guess with the technology now, we're having that social media and having access to internet, I guess everyone is looking at the same thing. It's just like if you want to look at it. But I think the way the world is moving is more towards the new consumer names with the new industries being highlighted at healthcare sectors or technology chips. So for example, if everything is going to be on the mobiles and everything, why not invest in the chip manufacturing company? So you can have like previously, I recall 10-15 years ago when we wanted to have exposure in autos, we also entered into the auto parts as well. So I guess new industries are coming along with the innovation, the digital side, or even the new consumers. I guess with the lower with increasing income per capita, there is more room for maybe hotel chains, maybe other areas. So not like just milk companies. Unfortunately, in Pakistan, consumer names is all about juices and milk. I don't think that's
Yeah.
consumer anymore. There are a lot
Yeah.
of more consumer attached to maybe tourism, maybe healthcare, maybe education, maybe mobile phone assembly or something of that sort. So I think that's where Pakistan lacks, and if Pakistan market needs to flourish and grow and able to attract money, I guess Pakistan need to diversify from the conventional sectors. And if you look at different fund managers, even domestically, unfortunately, when you look at their fund managers report, uh, half of their portfolio is actually in energy and banking sector. And we all know with the lowering interest rate, banking fundamentals were deteriorating, energy oil price coming down, then it's fossil fuel. For us, sustainability is a bigger challenge. But who to blame them? Like obviously you don't have any option. So if you are a $500 million fund domestically, where are you going to put your money? So the growth sectors only offer you a limited capital potential that you can put in. But I think the growth of the market, and especially in the new sectors, whether it's new consumer stories, whether it's new tech side, whether it's new digital side or innovation. I guess that is something Pakistan lacks a lot.
Sure, that's super useful. Thanks, Shimon. Ali, you need to help us out on broadening the breadth of companies in here, UNKSB. That's something, that's a big issue for everyone. Farhan,
I want to make just one quick point.
Go ahead.
I think
please,
just linked with that, because you asked about the valuation thing. So I think if you look at the answer which Shamoon gave, and I totally agree with him, that the underlying thing which people in Pakistan miss, and I'm not talking about just investors, but analysts and everybody, and that's growth. In terms of valuation, the growth aspect is missed, because when people are modeling, and especially when they're modeling companies, early stage companies and companies in growth verticals, the growth is not linear. While structurally we are used to modeling things in a linear fashion. So structural discontinuity, whether on the downside or growth side, is never modeled, and that's why there's more cyclicality. Similarly, larger companies, we don't have anything against larger companies, and you could be a bank, you could be an oil and gas company, as long as you're chasing growth, i.e. you're raising more capital and investing more. That's what investors want to see. They just want to see a growth mentality, and that needs to reflect itself both in valuations, the valuation framework, as well as the capital need and the capital structure of companies.
I think it's a very, very valid point. I agree with you. Maybe that's actually an opportunity for local investors, because if quality is mispriced, or if growth is mispriced, as you say, you're kind of being able to buy growth on the cheap here compared to other markets. Farhan, I just wanted to take you in on this as well, just to understand from your perspective, how do you kind of, weigh in on this debate? About how the opportunity set in Pakistan is. And I think maybe it's useful to, let's speak about banking sector in particular. No names, but banking sector. It's the largest sector at the PSX. Now, as Shamoon mentioned, that this is not seen as a sort of a growth sector. To my mind, I would classify E&P, fertilizer, power within the old economy sectors for sure. Banking, to be honest, I'm not sure about. I think one can make a case that it is a proxy to the growth potential of the country as well. Of course, it's counter-cyclical to the degree of interest rates in terms of the margins and the NIMs, but in terms of the growth, in terms of the deposit growth, the fee growth, how to tap the unbanked, so on and so forth. So you've been covering banking for a long time. You speak to a lot of people on it as well, both in terms of the banks and in terms of the fund managers. So how would you weigh in on the debate if let's say we speak about banking? Do you see it as an old economy sector, or do you see it as something which, in the right shape and form, can be a great way to play Pakistan?
So, I mean, there are two ways to look at it. I will just probably touch on banking first, and then I want to sort of shed some light on what Shamoon and Ali also mentioned. So I think as far as banking is concerned, I mean, it depends. For Pakistan, if you remember, you've been a banking analyst yourself, for the longest time we talked about unbanked economy. Every initiation report will probably cover that, but it's kind of remained very much an unbanked economy. I mean, if you look at banking, and I was talking to some clients as well. I mean, if you look at India, for example, right? It used to have a similar level of unbanked economy and penetration levels, but over time they expanded. The Indian banks used to come to the market every couple of years, and they used to raise capital because they were playing for growth. Unfortunately, in Pakistan, the banks, because of the high interest rates, were just happy to run treasury books and stuff. And obviously, our structure was also like that. So I think if you're looking at banking in terms of the potential, I wouldn't say it's an old economy, as long as there is growth and as long as you can see the banks are going to are working towards that, and structurally that works. Because if you look at, say, mortgage penetration, you look at consumer loans, right? Typically, people come for banking, and banking is a proxy to your entry point on a macro play. It's also your growth proxy. So, for example, go back to Vietnam. So in Vietnam, the structural story of the theme of fundamentally is you play consumption. Now consumption, because you have this big this sizable population, the 18 to 45 year bracket, which is the highest consumption segment, per capita incomes are rising pretty fast. Middle income growth is like high teens. And there are two ways to play it. You either play it directly through, say, a retail consumption stories, and Vietnam has that, which obviously Pakistan lacks. And that's something that goes back to the point that Shamoon and Ali were mentioning, like, you play consumption. Like Mobile World Group is a company in Vietnam, which people love amongst the foreign investors. And it's a great play on consumption retail. There are other stocks as well. There's a jewelry company and multiple, which unfortunately we don't have. The other way people can play consumption is obviously you look at banks, and then you look at things like mortgage financing. You look at, unsecured lending. That's been an area that's been big in, say, Thailand was an example in our region. India has had that. You had a bit of the boom and bust as well. So I think the trouble with banks, coming back to that, is that you are not seeing the growth, or they're not sort of making efforts in terms of lending to sectors or lending to segments where you would then try kind of play in the growth story in Pakistan. So then they kind of become, again, the point that, okay, fine, you are no longer a 25% ROE bank that you used to be. I can obviously, as Shamoon mentioned, I can just go and buy a bank somewhere else. As a foreign fund manager, you have a lot of options, unlike the local fund managers who still have to sort of benchmark. And that's I would say the challenge. So potential is there, but because it's kind of still remained a potential for so long, and you don't see any structural movement towards that, you then come up and say that, okay, fine. I mean, the only reason why I will still say that banks would be an important sector for foreign investors is that it then becomes a macro call. So if you want to come back to the market, your first point of entry in Pakistan will be banks. So that's the way it will always remain, attractive, unless you see, a shift in terms of focus.
But a re-rating of the
Let
sector
me
would be
correct you
contingent
on
on.
something. Just want to clarify. I never said the banks are old economy, and what I meant was, for foreign investors, if they want to have a banking exposure, they don't have to come to Pakistan. They can actually find bank maybe much cheaper. So maybe at that point in time we were discussing valuation. So maybe in Africa you can buy a bank at a price to book at 0.2, 0.3 at some point in time. So so that was about it. But you brought in the banking sector. Like if you look at their advances to deposit ratio, if you look at their digital innovation, if you look at their consumer loans, if you look at their mortgage, but like if you want to compare the advances to deposit ratio in Vietnam is 115%, in Pakistan is 45-50%. So we actually haven't gotten back to the 2008 and 2009 levels of 67-70%. So where's the growth? And tell me any sector in Pakistan which is not being run by the government support. So I think it's good on State Bank that they are now allowing new banking companies with the niche products and so forth. So so the conventional banks feel a bit challenged. I just want to clarify.
Sure. I mean, historically, Pakistan made the kind of the growth in banking has come through the liability side and the liability franchise, and of course, as you very rightly pointed out, the asset side has not really been there. It was there for a few years pre 2008, but then it never came back. So just before we take questions, Ali, I just wanted to get you in very quickly, finally, on you've had a very rich experience as a fintech analyst with Autonomous. And to understand from a banking perspective, because you have again got that global perspective over there, we in Pakistan are still confused about fintech. Is this a disruptive force for banking? How has it panned out globally? Is it a disruptive force, or is it something which the banks can incorporate and kind of just use as a improving their cost efficiency?
It's an expansionary force. It's not a disruptive force. Disruption is a very strong word, and disruption is what happened with Nokia. Disruption is what happened with Kodak. It's an expansionary force, as in it expands the market. Our market is very small. As you said, that it was liability focused on deploying the liability side of things. B2C business was hardly exist. Till 3 years ago, only 20 million people, i.e. 10% of the population, had bank accounts. This is also reflected in the capital market side. We all know the numbers. So with the digital, with fintech, you have an opportunity of expanding that market at a very low cost base. So I think that's a massive opportunity, not just for the banks, but for other players as well. And that's what we have seen in other markets. So if you look at China, WeChat and financial and Tencent, they've expanded the market. It's not that suddenly, Chinese banks are not making money. I don't think there's actually a direct earnings impact on any of the Chinese banks. But what these companies have done is that they have expanded the reach and put themselves as a layer and expanded to markets which banks are not previously catering to. So I think it's a big opportunity, but I feel that fintechs need to appreciate the compliance side, the regulatory side, and there's an opportunity of banks working with fintech companies in terms of and then growing. And that's the paradigm which we've seen even in Europe. In UK, for example, I think that talk of disruption in fintech is no longer there. It's more about collaboration. And you also have to, last point on this, you have to remember that in payments, there has never been an example of disruption. Coins, we still use coins. A coin today looks exactly the same way how it used to look in 17 BC when it was invented. The cash note which you use looks exactly the same way how it looked like in Han China where it was invented. So, we still use checks. Globally, there's not any example of a disruption in payments. So I think the word disruption is too strong. I think it's an opportunity of expansion.
Great, thank you. That's super useful to us. Let's just take a few questions that we have. If anyone has any more questions, please feel free to put it in the chat box. Just in no particular order, if we are to take the question from Mohammed Shoaib, would it help to attract more FI money, foreign institutional investor money into Pakistan market if it moved back to frontier markets, or is it just a myth? Farhan, you want to take that?
Sure. I mean, I think if you kind of look at frontier as sort of an asset class, I mean, it is sort of the least benchmark asset class amongst the three major asset class per se. So Pakistan, even though it is been an emerging market, a lot of frontier funds continue to hold positions. What I would think, and sort of that's my understanding, is that you can get people if they feel things are right in the valuations and the macro, they kind of find them attractive. They can probably go a bit above the benchmark weights, and we've seen that in the past when Pakistan was 8-9%, and there were funds who were holding Pakistan at around 14-15% weightage. But if you are sort of an off-benchmark bet, often within frontier funds would probably not want to go beyond the general sort of benchmark. I would think that while there is potential to probably have incremental flows, it again depends in terms of how they feel about the market. Though one thing with frontier per se is that it's become a very challenging class from investability perspective, especially with Argentina going up, Pakistan going up. We had UAE and Qatar kind of went up as well, and that's why a lot of funds have continued to hold those guys. So I would say there's probably some incremental potential, but I don't think so it is going to sort of move the needle a lot unless there are other factors like valuations or the market itself becomes attractive.
Okay, great. That's useful to us. Thanks, Farhan. Okay, so there's another question. Can you share your thoughts on the startup venture capitalist landscape in Pakistan? Specifically, what is the prevailing perception in foreign financial institutions on this subject, with ventures such as Baikia trying to establish themselves in this market? Ali, you touched on this before. Maybe just want to add something to it.
Yes, there's a lot of interest. It's all in the public domain. So if there are a lot of articles and news about investors, VC funds looking at Pakistan. Of course, we are starting at a very low base. So our numbers compared to even Egypt are much lower in terms of VC investment as per capita. But I think it will increase, and it's only inevitable that it will continue to go up. Just briefly on the earlier point, I think frontier markets, I think if Pakistan belongs in the frontier market index, it's very difficult to compare Pakistan with India, China, Russia, and Brazil. So when I talk to investors in emerging markets, it's not worth their time to spend time on Pakistan when it's 2 basis points on the index. And they would rather spend time understanding what's happening in China. They would rather understand what's happening in. So these investors are not benchmarking Pakistan versus Vietnam. So even if you take the debate, even if you look at this in 1 hour, which we spent talking, we never said, let's compare Pakistan with China. But that's what MSCI emerging markets does with us. We kept on talking about Pakistan versus Vietnam. Vietnam is not an emerging markets index. So Vietnam is in the frontier market index. So I think we have answered that question even in this forum.
Well put. That's true. I think that's a valid way to see it. Okay, so there's a question which comes in. What in your view needs to happen for Pakistan to attract more foreign capital like it has in the past? Shamoon, you have a lot of thoughts on this specific topic, and I think just to add, foreign capital, like the question has phrased it. It's not just portfolio investment. I think FDI in this country has also nosedived. So Shamoon, if you have any thoughts on that.
Yeah, well, yeah, of course. With last 7 years, I guess, on an yearly basis, we have brought in the foreign fund managers and investors to around 7, 10, and also with the Swedish Business Council, so I can share their perspective as well. Our perspective is very clear. We are into it. I guess Pakistan, first of all, a sustainable economic policy, which any foreign investor can trust. There are no inconsistency in policies where one day you have one policy and the second day you just change it. So I guess that is one area where Pakistan needs to flourish. We don't have to run into current account or fiscal crisis every 4 years. We have to get the economy adjusted alongside, so that no foreign investor feels that maybe at one fine morning the rupee would devalue so much that my dollar value has gone much lower. So I guess these are a few, and the third one would be to fix the market structure. I guess having a proper representation of the economy in the stock market. The current sector base in the stock market right now, I don't think they are representing the Pakistan economy in general. There are so many sectors which are not covered. The companies are not yet listed, which might be of interest to foreigners. I think more scope would be in FDI and on the tech side, where they can have the exposure. But yet again, I can just give you an example. 2 years ago, we brought in one of the largest sovereign fund in the world in Pakistan. And I don't want to say they wanted to invest or not, but one thing they did mention was that my minimum ticket size is $50 million. And there are no companies where I can put my $50 million where there is a growth. So I don't want to get into the conventional businesses. So I guess these are a few challenges on the underlying. It has nothing to do with the frontier and emerging market index. I guess it's a problem of the market itself. I guess we have to grow. We were 10 years ago, Pakistan was around 250 UINs. 10 years after, you are still at 250 UINs, and you're blaming frontier and emerging markets index. I think we pick and choose a very petty issue rather than the real issues, the real challenge in the market. You haven't done anything on the liquidity side. We were much liquid in 2008 than we are today. At the same time, we had better products. We did not bring the new products that world has seen in the market. And then again, we want the foreign investor to invest in the market. So I think these are, so a few areas are obviously on the macro side, especially on the consistency. I guess that is the biggest challenge. And I guess with the current government and the way things are, I hope Pakistan stands a great chance today. If we are able to pull through these reforms and make the foreigners trust them, I guess Pakistan stands a great chance at this point in time.
Great, thank you, Shamoon. I guess we do a last couple of questions, and we're just slightly above time. We'd end in the next maybe 3-4 minutes. So there's one question which is coming through: how big a chance is that Pakistan falls into a debt trap? Are there any regional examples to learn from? And the second part of that question is, given the macro situation, in your view, are the financial markets capturing in GDP growth of 4 to 5%, or can Pakistan only grow at 2 to 3%, but with consistent structural changes? And what kind of results can that have on financial markets? Um, Farhan, you have any thoughts on that? I mean, I don't know about the chance of the debt trap, but either part of that question, if you want to take a stab at it.
Sure. I think with regards to the debt trap, there's always this issue with Pakistan, because we always kind of float with that. I think we probably need to make structural adjustments quickly. And I think linking to the second question with regards to the growth side, I think for Pakistan to be able to sustainably grow at 4-5% at least, you will have to make those structural changes. Otherwise, you will fall into that debt trap and to the external account issues. So in the current scenario where we have not done much reforms, I think for us to be able to grow at 4-5% is probably not going to happen. We might see that happen for a year or two, and then and as we discussed earlier as well, it get shortened. So I would say that there is an urgent need to do structural adjustments if we want to grow at least, and we should be growing at more than 5%. Given the population issues that we have as well. But for that to happen, we need to make the structural adjustments now than later.
Okay. So what Farhan is basically trying to say is that make hay while the sun shines, and the sun's not going to be shining for very, very long unless the structural changes come through. I think let's just kind of take the last question. This is the question: what sort of excess growth are you seeing in dollar inflows due to the NRA accounts? There is a massive arbitrage opportunity for NRPs with low interest rates in US and other developed markets where NRPs reside. Ali, I'll let you take this, and just sort of, I think the intent of the question is more probably regarding fixed income flows, and the rupee and the dollar rates that the state bank is offering. We've already kind of touched on, the equity flow impact that can come in through the Roshan account. So maybe you could take that, and then we'll do a wrap.
I'll be surprised. I think I'll be disappointed if it's not less than $2 to $3 billion. 6.5% dollar return is very attractive. Even I can borrow I can take an unsecured loan from my bank at 3%. So there's an arbitrage.
Okay, good to know. That's I think that's Farhan. What about you? What rate can you take the loan at, and Shamoon, you as well?
I think for Singapore dollar, we can get it at under 3%. But I think the trouble with the Singapore dollar is that given the US dollar outlook is pretty weak, and we kind of lose money on that trade as well.
Okay,
so,
the cross trade.
Cross trade. Yeah. So that's. I mean, there's generally a sort of a consensus that there are more dollar bears in the market than bulls. So I think that is something that needs to be looked at. But from a sort of I think arbitrage perspective, I think if you're borrowing in USD, clearly there's a clear arbitrage. And now with the Roshan account, as Ali was mentioning, if that process gets smoothened and it's easier, I'm sure people will be interested to put money.
Great. I'll thank you, Ali, thank you, Farhan, thank you, Shamoon. Very useful insights. I hope our guests as well have benefited from your expertise on this. I'll just hand it over to Asim, the president of the CFA Society. And Asim, any closing remarks from your end? Is Asim on? I think you were. I'm not sure if
he needs to be unmuted.
Yeah, he's there. Okay. He's there, but I think he needs to be unmuted.
Ji, thank you, Farooq. I think now I'm unmute, so you can hear me. So thank you, Farooq, for taking the lead in taking this forum to project some areas where we need to work. Thank you, Ali, Shamoon, Farhan. It was really a treat to hear from you, treat to see you after a long time. So the idea of this event, actually, it's the first of its kind event, and the idea was probably it's too small a market. We need to play a role in expanding it. And while you all have highlighted, there are several areas which are beyond our control, like global factors, Pakistan is in frontier category and the funds are shrinking. So that's an area where we can't help. But several areas where people like you, and members of CFA community, general participants can also work. That is increasing the market breadth, bringing in more companies to get listed. And at that one front where we intend to work as well. So what we are thinking is planning to bring in few of the companies which we think could be the target for listing, and just have some discussion with them. How can we list them at PSX, and how can we help contribute? Plus, along with that, I think perception issues, I will just share my experience, just a very candid experience. Last year, I had an opportunity to visit Abu Dhabi from actually CFA Forum, where we met the sovereign wealth funds, and they were so big. So they had not heard about Pakistan. They were not aware of even India. For them was a very small market. So yes, we can't target them, but at least we can start talking them, approaching them. Obviously, investment bankers plus the international houses like Farhan, who have access to those, can project Pakistan better. So where we can, few areas where we felt we can contribute a bit and try to make some effort in projecting Pakistan. Rest, I think I think beyond our control, but let's hope things will continue to improve. But let us keep playing our role, and looking forward to hear from you again. Continue these sessions. Let's contribute more. Let's start talking about it. Summarize these points, and let's take them forward to have some impact, positive impact, change in the market in the positive direction. So with that, thank you very much. Thank you again. Thank you all the audience. On behalf of CFA Society Pakistan, I'm very thankful to you. Looking forward to connect with you again. Hafiz.
Thank you, Asim.
Thank you, Asim.
So you can share your feedback through this link about this webinar. So I will encourage our audience to use that so that we can have an improved progression of such events in the future. Thank you.
Thank you.
Thank you.